Good evening, everybody. I had a hard time following what the market was doing today because they had the Benghazi hearings all day long going on. They still have them going on. All right. Tonight's going to be observe the obvious patterns. And as we could see in the Dow, even though it was getting a little bit toppy, we still had one simple criteria. If it had opened lower and started trading down through the T-line, that told us they were pulling back. Today, when we saw the pre-market futures opening positive, they told us that we were still trading above the T-line. Didn't know we were going to have a 300-point day. However, where do most people buy? They start buying exuberantly at the top. So this is why we're kind of putting out a warning to watch to see if they come up and touch the 200-day moving average. Where is your first likely target after breaking through the 50? The 200-day moving average. There's going to be probably some profit taking. Same scenario in the the S&P shows here they went up through it today. It wasn't on the other chart. No, that's something wrong with that. This must be the S&P. This chart shows it went through the 200 where it was still climbing toward it on some of the other charts. And the NASDAQ right there at the 200 with kind of a possible little bobble type pattern. So if they open the markets positive tomorrow, which I'd be surprised, only because with such a big move, there's going to be some profit taking on the open, I would guess. And you just have to see whether they can get back up through the 200 or not. Oh, Jazz, I don't think it matters. It doesn't matter what the rhetoric is out there. There's always comments that somebody makes and the market goes down. Just watch what your charts are doing, and that will give you a good idea of what the reaction is to whatever is being commented. So it doesn't. One comment is not going to move the markets. The markets are already going to move, and there's just usually going to be a reason for the market moving in any certain direction that day. So you could have a positive comment and a negative comment. If the market goes up that day, everybody says it was a positive comment. Nobody pays attention to the negative comment. If the market goes down, everybody pays to the negative comment. Nobody pays attention to the positive comment. So comments are usually to confirm why the market has gone in a certain direction. So the only real important factor as far as analyzing what a trend is doing is exactly what the trend is doing, not what somebody has commented about on it. That's why I always come back to the simple premise that don't listen to anybody. Listen to what the market is telling you. No, I think the NASDAQ was up 79 today. So, we were just getting to crude oil. Crude oil kind of is leveling out. Now, notice how the stochastics are still in a little bit of a downward direction. But somebody asked today whether it was time to go short on crude oil, and the answer was no. You're getting too close to being oversold. Plus, notice where the support is for crude oil. They've been buying a lot of crude oil when it hits the $45 range. Is the audio in and out for everybody? If you're having problems with audio, sometimes you have to log off and log right back on, and that kind of gets you a better connection. Yeah, so if you're having problems with the audio, log off, log right back on, and see if that doesn't get you a different setup on a connection. So that was crude oil. Gold had a hard time. Notice what it did once it got up to the 200 area. Hanging man doji, and then gapped down. And where are we right now? We're still back below the the T line. So where's the next likely target? Probably somewhere down in here, which would kind of equate to this channel right in here. And the dollar. This is a good example of why the signals tell you when to be buying. There was kind of double bottom down here. Then you had the doji sandwich. Then you had the left-right combo. So the more you can put these in combination, where you see a strong buy signal, first of all, bullish harami, doji, doji sandwich. And where did the doji sandwich end up? Above the T line. Then you have a left-right combo, which we know is a very strong signal. You're already seeing the stochastics coming up, so we know we're in an uptrend. So would we expect a big, huge move like this on the dollar? Don't expect it, but at least you know you're in the right direction at the right time. So anyways, okay, thank you, Danny. Danny's saying hit the blue and white X up in the top right-hand corner. All right. Yeah, so, okay, he did that. Jim, depends on what the market sentiment is. Sometimes when the dollar goes up, crude oil is going down, or vice versa. Then there'll be other times when the dollar is going up. For some, the rationale that crude oil is going up at the same time is because of something. Just like interest rates and the market. It's kind of common assessment that when interest rates are going up, that's bad for the market, it goes down. But then there's other times that when interest rates are going up, people say, oh, the economy is getting better. Buy the stock market. So it all depends on what the psychology is at the time. And you'll usually hear that from the talking heads on the financial news stations. They'll tell you what the sentiment is out there, that bond prices are going lower, interest rates are going up. That's good for the stock market, because apparently the markets are getting better. The interest rates are heading higher. So, anyways, what else was I trading today? As we can see, the J-hook pattern is still in effect on live cattle. Expectation is to probably head up here to the 200-day moving average. Stock guy, if you just hold your individual stocks till after I tell Jim to do the double line, then if you limit your request to 2, we'll zip through them then. And here's do as I say, not as I do. I was long cotton today, and I was just happier than a pig in doo-doo that it opened higher and was still trading higher. And it was trading up here when I went to the airport to pick up Sandy, thinking, all right, they're still moving in the right direction, J-hook pattern. Don't need to put a stop on. Where would have been the logical place to put a stop? Right back where it opened, because logic says if it came back down through there, now it wasn't going to do that by the time I left here and went to the airport and got back. But sure enough, when I got back, it was trading down here. So I'm the type of person that doesn't like to make the same mistake 30 times. But I've written down in my journal that everybody should write every day what they did right and what they did wrong. If I had a nickel for every time I wrote down, put a stop at a level that you think it should not trade just for protection, I probably wouldn't have to be trading. I'd have made so much money. Yes, okay, and so let's see. Remind me of keeping profits. And so while we're on it, we got somebody is requesting that they've made good money with candlesticks, and then they give it all back. And then they make good money with candlesticks and give it all back. So this is the exact reason why I always have a journal on my desk, so that I know what I'm doing right when I'm doing it right, and what I'm doing wrong when things are going bad. So if your problem is you make good profits and then you give them back, that should be the first part of your analysis. You go back in your journal and say, all right, what did I do right when I was making money? And what was my sentiment when I started losing money? And that way you can do your own assessment. It's much more powerful that you sit there and you figure out on your own what I shouldn't be doing after I've made profits. And I've kind of assessed this for myself many times over, is that once I've got a good profit, what do I think is the best thing to do? Well, first of all, you've got that euphoric feeling that says, you can make money no matter what. You're a god. So you flip right over into another trade. Well, when you flipped over to that other trade, the whole market conditions were completely different than what you were doing when you were making money. So there's been so many times that I've made big profits, and I'm thinking, this is easy. I'm just take my profits on these, and I'm going to roll over into the next batch and make another big profits, without thinking, where's the market conditions now compared to where they were when I made these big profits? So I've discovered that if I've made some big profits, that I let my money sit for a day, 2 or 3, just to get a reassessment of what the market is doing. Your profits aren't going to go away if you're sitting in cash. And at the end of the month, if you're up X number of thousands of dollars, you're not going to worry that for 3 or 5 days during the month you didn't trade at all. You just kind of sat and reassessed. Or the worst case scenario, if you're like me, you always have to be in the game. That if I come out with big profits, maybe I'll buy another small position somewhere. So this all boils down to that our biggest faux pas for investing is usually our own emotions. So if you've picked up trades and you've made good profits, just sit for a day or two and say, all right, what do I want to do next? What are the markets doing now? I put in stop limits in and watch the market makers run the price down to pick me off. Fred, unless you're a big, huge trader, which I don't know if any of us are, they're not going to, if you've got a stock that's trading hundreds of thousands of shares a day or millions and billions of dollars each day, if you're trading a good volumes stock, they're not going to come down to pick off your 1,000 shares, 5,000 shares, 500 shares. That has to have been a market force. If you put a stop, the stop should be in at a level that tells you the price should not move back to this level. Unless you're trading something very, very thin, they're not going to come back and pick you off. If they come and pick you off, it's because the price was moving in that direction and you should be out of the trade. Now, are there times where they come down and the pullback stops me out and then turns around and heads right back up doing what I thought it was going to do in the first place? Definitely. I mean, that happens often, not terribly often, but often. But if the price comes down, picks me off, because that's not where it should be trading, I'm out of the trade. But if it turns around and starts back up and doing what I thought the chart was supposed to be doing initially, I get back in. And that's getting over this ego problem that if I just got stopped out at $50.20 and it went down to $50 and then started back up and I bought back in at $50.60, That's because it was doing what it was supposed to be doing. That 40 cents that I've given up is just the insurance that I wasn't holding on to something that was going down another 60 cents. So that all boils back down to, there's many times where I put in on a trade, get stopped out, put on a trade, get stopped out, and then put on the trade again, and I make what should happen in that trend. All right, I've got, so anyways, watching level 2, I can see my stop limit, and it sure looks like they do it for sure. Fred, I do the same thing, but as I say, if it turns around, I just get right back in again. So let's see, where were we now? Oh, we're short coffee. This is the signal up here. When you start seeing dojis in the overbought condition, they're going to tell you which way they're going to go. So we started shorting coffee. We were long coffee. We took profits up here. Actually took profits right here when it started selling off. And then the next day when it gapped down and started trading down, we went short. So where's the likely target? Well, we can see the stochastics are still heading down. So I guess the likely target is right back down here at the lows. Okay. NEO is an example of a kicker signal. Trading down here, opened here, closed here. The next day they gapped it up above the previous day's open and went the opposite direction. That's a definite change of investor sentiment. That's the most powerful change of investor sentiment. Even though it did traded lethargically today, the expectation is you're going to be in an uptrend. The kicker signal is the most strongest of all the signals, and there's an expectation of a kicker signal that your uptrend will remain strong until you see a candlestick sell signal and a close back below the T line. So today was a good kicker day. UIS did a kicker. Now, what can we analyze about this kicker? Obviously, when it opening here, closing here, opening at the same open and went the opposite direction. What did it tell us about the 50? The 50 wasn't going to act as resistance anymore. What did it tell us about this little resistance level? That's not going to act as resistance anymore. So somewhere up here is probably the next likely target, which in this case, a kicker signal off the 50 would give a good impression that you're going to head up to the 200-day moving average. DTLK, kicker signal. These are messages. Even though we have a signal that we call the message, there's a tremendous new dynamic in this stock. In this case, it was an uptrend. Now it's done a kicker signal through the T line. I would expect the worst case scenario would be that it's going to be in a strong 45 degree in the same trajectory as what it was prior to the pullback. Jazz, no, if I'm trading and I'm about ready to buy or sell something, and I want to make sure that the sell signal is confirming, especially in the commodity area, a price might move to a certain level, which tells you, oh, it's time to get out. But when you look at the level 2, they're already bidding back up. Let's say the price moved back down, and then they're already, when they traded at that level and you're about ready to get out, I go to level 2, and then I see that they're bidding above that level by 1 or 2 ticks. That tells me that somebody just sold it off, but they're still buying, or they're still, the next tick is going to be moving back up. So I use the level 2 in that sense. Would SPY qualify as a kicker today? No. This is just an update and a downtrend. Remember, a kicker signal has to open at or above the previous day's open and go the opposite direction. Level 2 LC is where you've got kind of a column on your order page, and it shows in the middle what the price is, and then it shows all the bidders on the left-hand side and what the volume is that they're coming in to bid. And then on the other side is everybody asking. So if you can see where the direction is going based upon that level moving up and down, buying, taking out the ask positions, or sellers knocking down the bid positions. Is there a way to tell the price fail after kicker? Sam, you use the same criteria as any other analysis. That if this is a kicker signal, and this is the signal that told us the bulls are in control, where should it not trade? Price shouldn't close back below the halfway point of this candle like it did over here. That told you that was a failure of a kicker signal. Now, what's the odds of a kicker signal going higher? I would say probably 80, 85%, even 90% or greater. But remember, that's the probabilities. When you see one that doesn't work, you close it back out. But anytime I see a kicker signal, like an NXPI, it's basically telling me there's going to be more upside. What type of pattern is this? This is our classic. There's our fry pan bottom. There's our J-hook pattern. Where did it bounce from? Right off the T-line, a kicker signal up through the 200 resistance level. Tells me there's probably more upside. No, Henry, I would say 80. I want to say minimum of 80%, and not so much the success ratio, but a kicker signal. I think this was to illustrate a little kicker signal today. Oh, I don't know why I have that up there. This was supposed to be this is not a kicker signal. This is just a nice, let's put that in the wrong list. That's a J-hook pattern, which is still a good chart pattern. That's a kicker signal on True Blue. So what you expect after these big moves is that 45 degree. Ty, the kicker signal is so strong that you don't necessarily have to be in the oversold area. The strength of a kicker signal is that there's been a tremendous change of investor sentiment that you want to be buying immediately. This is CTXS, another kicker signal. And a kicker signal, now a lot of people will say, well, here's kind of a kicker signal, but the true kicker signal shouldn't have a tail to the downside. But it can still have a tail. It's just the most powerful kicker signals, they open it and immediately start trading higher. As you can see, they opened here and closed here. They opened here, traded down a little bit, and went back up. So that may have not have gotten me into that signal or that pattern at that day, but the next day I would have been a buyer. Over here, if I saw it gapping up and I saw right here that it was trading higher, I'm probably going to be a buyer. I say probably, because first of all, we know that's a kicker signal setting up. And is this too high to be buying? That's where I flip to the 10-minute chart. And I'm going to guess. I don't know. Oh, here it is over here. Oops, because that's the 5-minute chart. No wonder it was so big. 10-minute chart. 10-minute chart. If I saw the chart right here, if you cut the chart off right here, I can do that. If I happen to see the chart right here, kicker signal, I'm still say, all right, I can be buying. If I happen to see this signal right here, say, all right, maybe I'll wait a little bit because apparently there's some selling. But as soon as I saw this going on, that still tells me we're in an uptrend. Nancy, a kicker signal is like what we saw in eBay today. This is kind of a minor kicker signal. Whoops, I have to make it big. We saw that, oh, this is why we're on a 10-minute chart. That's why it looks unusual. We had a down day in eBay yesterday, and then it gapped up. I mean, first of all, the gap up, a lot of people say, well, what do we do? Sometimes they gap it up and take it right back down again. They sure do. And with the visual elements of candlesticks, we can see immediately which way they're taking it. In this case, they bobbled it a little bit, and then you can see they were still buying. And they bought all day long above where they opened. So that's the kicker signals. When they open here, close here, the next day they gap it at or above the previous day's open and go in the opposite direction. That's your strongest of all the signals. That tells you there's been a dramatic change of investor sentiment. And if you can factor that into a pattern, I mean, in this case, you observe the obvious. The obvious was the 200-day moving average was a resistance level. And notice what we had, kind of that little T-line crunch. But today, when they gapped it up, I mean, this gave us a very clear example or a clear indication of what to do with this trade. Had we bought off of this kicker signal, it was either going to resist here or resist here. We saw some resistance here. But what was the one major element that it didn't do up here? Didn't close below the T-line. Had it opened lower, that would told us that the resistance level is still acting as resistance. They're taking it back down. The fact that they kicked it up through there not only told it broke out, that there's probably going to be a lot more upside from this level. LYTS, yes, that's a kicker signal. And where did this occur? Right off the moving averages and broke this downtrending channel. I wouldn't be adverse to buying that one. That's right. Corky, the kicker signal is so powerful that you don't pay attention to the stochastics. Southwest Airlines, I'd consider that a little kicker signal, and notice where they did it. They couldn't close below the T-line. You had kind of that little slow curve, and then they gapped it up through this level, basically telling us more than likely you're back in this trajectory. You'll still have more upside. So the probabilities of seeing a kicker signal that you can pretty well be buying as soon as you see it. Now, I didn't write down any, oh, I do. This, oh, I know the reason I had this one is on the other charts, this one showed more of a doji up here, which puts us in the condition of a flutter kicker signal. And with a doji, after they've taken it down, they gap it up and do a doji. It's indecisive, but remember what we know about a doji? They're going to move it in the direction of how they open it after a doji. If they open up positive, you want to be buying immediately because you know that after a doji, if they open up positive, they're going to trade it positive, which meant if you had another positive day that opens up here and you took out the doji, you basically have a kicker signal. Boeing, no, this would be more of a, remember, you want to have a big down day. The candles are relevant. Now, this is more of a doji gap up. So that's not a kicker signal. It's just another strong day, your doji gap up. Okay, let's see. I've got some more to illustrate here. There's your doji sandwich. Notice you had a bullish day and a doji right about here on the resistance level. Then another positive day, same magnitude of this one. What did it tell us? It told us that they were breaking this J-hook pattern. So here, now you've got wave one going into wave three. So if this was a 7-point move, look for the price to go up into the $35 range. Now I say look for the price to go up in the $35 range because the common occurrence of a J-hook pattern is wave one and wave three are approximately the same. That's what your target should be. That target may also mean that if you missed this move, that you at least can gauge what this move should be. that same approximate move. So you can always get in here, even though your stochastics aren't down in the oversold area, the pattern is telling you that another wave is about ready to start. So if you miss this move, you can always calculate what this move will be up here. And that does two things for you. You're buying the stock, you can uh, pick up the stock knowing what your percent return will be, or if you do an option spread, you know you can buy one set of calls and the other set of calls up near the target area, getting better leverage on your spread. So here's one that's setting up for a doji sandwich. This was more of a doji also on the other charts. But if this opens positive, we know that this day and this day will be approximately the same. And what would it be telling us? It's telling us our fry pan bottom and our slow curve is breaking us out. But if we can break through this level, we're going all the way back up here to fill the gap. That's the only exponential. Yeah, the only the 3T is the 3 exponential. The T line is the 8 exponential. The 20, the 50, and the 200 are all simple moving averages. Volume is kind of low on this one. What was the volume today, JS? Oh, that's good enough for a $40 or $35 stock. Yeah, that's not low volume, because the reason you don't want to get into a low volume stock is if I'm buying a $30 or $33 stock or a $35 stock, I'm probably not buying 5,000 shares. I wish I could. I can buy 5,000 shares of a $5 stock or 3,000 shares of a $12 stock. But on a $35 stock, I may only be able to buy 1,000 shares. And that's not going to affect me getting in and out of a stock that's trading 208,000. Probably not even going to affect a $35 stock trading 120,000 shares a day. What if it opens up and then goes back down below the open? That tells you it didn't work. If it stays down there, you close out the position. The anticipation is, and the high probability is, if it opens positive, it's going positive. No, it doesn't qualify as a belt hold. This is just a big left-right combo right here at the 50. Remember, a belt hold is something where it would have gone way out of the trading range and back up into the trading range. Yeah, I mean, you can see what the trading range is right in here. You would have to see it obviously moved way out of the trading range and back up again. Now, you can use that information built into a doji sandwich. This is what we call the McMuffin. We kind of termed that or gave it that name because we have the morning star signal and a doji sandwich. So that combination is a morning sandwich or a McMuffin. And so we know what the expectation is after a morning star signal, upside potential. That's a candlestick reversal. We also know what a doji sandwich does. Tells us there's more upside potential. Which tells me if they open this positive tomorrow, you can be a buyer, even though your stochastics are in the mid-range, because what's that telling us? It's telling us we've got more upside, what we expect coming out of the McMuffin, number one. Number two is telling us the 50 is not going to act as resistance. And number three, we can see this level right here is not going to act as resistance. A morning star signal is a 3-day pattern where you have a big down day, a day of indecision, and then the third day closes more than halfway up this candle. So that right there, there's 12 major signals, 6 longs and 6 shorts. And those graphics are all on our website. Or the book I would suggest if you want to learn the meaty signals and patterns is High Profit Candlestick Patterns, the green book, the second book. Can you just say a few words about using the 3T with the T line? It's a beautiful trading strategy. Hold a stock until the 3T block drops below. You can use it in that manner also. Use the 3T. Let's see. As you can see up here, as you can see, the 3T line has never been able to cross the T line. Even when it came up here on a day where they took it up, the 3T line never got up above the T line. So, but this kind of confirms what you would have done on the next day if this had been a doji gap up in the oversold area. If they opened up positive and started trading positive, if you were short, if you hadn't covered it on this day, you would have covered it on that day and start going long. The fact that they couldn't get the 3T line up above the T line tells you that the downtrend remains in progress as long as the 3T doesn't cross up. And we'll notice in this whole downtrend, the 3T never crossed the T line until we got to this piercing signal and then confirmed the next day. That's where you would have covered, your short position. A doji sandwich is a bullish day, doji bullish day. A flutter kicker is a bearish candle. This again, if this was a doji, which it was on the other charts, then a doji, and then a bullish candle. So this candle right here is red versus, and then a doji gap up, and then a green candle. Okay. So we got that same scenario right here on DDC. A bullish day, a doji type day, a bullish day, doji sandwich. What do we expect after doji sandwich? More upside. Well, if they open up positive, what's it telling us? They're breaking through the 50 and they're breaking this downward trend channel. That's the optimal time to be buying. So this right here, that doji sandwich, just gives you a high probability that there's going to be more upside afterwards. The J-hook pattern. As you can see, we had that belt hold bullish engulfing signal, more of a bullish engulfing signal. We got a belt, you can give it the terminology of belt hold. But it came up here, and then notice what happened up here. We had a shooting star, and we started seeing selling. And where did this selling occur? A good fur piece away from the T-line. Where was the likely support, or where are they likely to bring it back to? To the T-line. We could always start buying back in here at some point, as long as they don't close it below the T-line. So now we have a J-hook pattern, which gives us the same information. If this moved from here to here, this move is going to be the same magnitude. That's on zero. We will be, I'm in the process of finishing up the information on the T-line. Notice what we have right here, the T-line crunch that took us up through the 50. So this pretty much told us whether to be selling at the 50 or holding. And when it went through, told us that they were going through. Same kind of scenario on BABA. When BABA hit the 50, the next day they took it through. And again, this was our common price move. Once they got through, when they break through a resistance level, what do? They come back and test it to see if it's going to act as support. Told us it was acting as support. Yesterday it closed below the T-line. But today, hold on. Must be allergic to the cat. Thank you. So there's a bullish harami. So what's that telling us? If this opens tomorrow, what type of pattern do we have setting up? Another J-hook pattern, which makes the 200-day moving average our likely target. Will I enter a trade on zero? You could. I mean, we know that if it starts trading positive from here, it's going to break out through this level, and that this is the next magnitude move. I wouldn't be afraid to enter this one. This may not be the most beneficial one to trade as far as the other opportunities we have out there right now. Olin, this is why you ought to use that T-line. Notice how the T-line crunched right up through the 50. Then we had a little hammer gap up. What did that tell us about the 50? That we weren't resisting, and we had a little J-hook type pattern. Tells us we have more upside. How much upside? A lot of people ask, do I ever use the Fibonacci number? I don't use it as a reason to buy or sell. Try to make this small enough. But if I'm thinking there's going to be a new target, where's my next target? Could be the 200-day moving average, or what is everybody else looking at? Well, this is the high, and this is the low. There's my 38% retracement. There's my 50% retracement, which looks like it's coinciding with the 200, and there's my 62% retracement. So we'll get to one of these, have no idea. But if I get up here and I start seeing sell signals at this level, then I know that's time to take profits, because that's where everybody is starting to take profits. So basically what it does for me is allows me to see visually why the sell signal is showing up, and whether it's a informational as far as that's the selling point. Here is J.C. Penney, also setting up kind of a J-hook pattern. We're right at the breakout level. That if this opens positive, this is one of our long-term holds. I think been holding J.C. Penney ever since the $4 or $5 range. Just figuring at some point it would get up to the $9 or $10 range, and it's getting there. If you were watching this stock at the bottom, where would you have first bought, Olin? Well, I would have probably been buying here and closing back out. May have been buying here and closing back out. Stochastic's back in the oversold area. You had a bullish Harami followed by a gap up. So if I'm buying on a positive open after a bullish Harami, where do I think my next target should be? At least the T-line. So once it gets up to the T-line, if I'd seen a sell signal here, meaning if they'd closed it back down below the low of the doji, that told me the T-line was still acting as resistance, close it back out. In this case, I may have been able to break even. The fact that they took it up through that time on a left-right combo told me more than likely the next target is going to be up at the 50-day moving average. So if I was watching this, I could have probably been buying right in here and closing it back out. There's a bullish left-right combo, buying here, closing it back out. So it's not unusual to be buying, closing, and then buying back here. Now, a lot of people say, oh, man, this one's nipped me twice. I'm not going to trade Olin anymore. It just kills me. My answer to that is don't look at the name. If I see a chart that looks good and I see, oh, man, I don't like this stock, my suggestion to everybody is put your hand over the symbol and ask yourself, is this where I'd be buying? Because a stock doesn't give a hoot what you've done in it before. It's going to move in the direction that the chart tells you. So I only say this is because I've done that many times myself. I get into something, get stopped out. Get into something, get stopped out. Get into it a third time, get stopped out. Another nice signal, and I say, I'm not going to trade this. It keeps nipping me. But then I put my hand over the symbol and say, all right, would you be buying this right here if you didn't know what the name was? And if the answer is yes, remember, that stock doesn't give a hoot where you bought before or sold before. So here's a doji sandwich following our best friend's signal. We recommended this one, and this one was identified by David L. in the chat room. I think it was David L. There we had our little inverted hammer, then a gap up the next day. First of all, it's our best friend because we got a kind of a doji gap up. Now we've got a doji sandwich. So we can see what the pattern is. Came up, failed, pulled back, now has gone through the resistance levels. This should have much more upside. Mario, no. My universe is 2,750 stocks. That's with the criteria that they trade above $5 a share and trade more than 200,000 shares a day minimum. That takes the universe from 10,000 down to about 2,700. And in an instant, you can refresh your charts and scan that universe, whether you're looking for stocks in the oversold condition with the biggest percent move today. So, and the reason I don't have a particular trading stocks is because take a look at Apple. Apple through the years, let me get further back. Obviously, there's been times to buy Apple. There's been times to buy Apple. There's been times to sell Apple. And then there's been times where you couldn't really do anything with Apple until the last couple of days. Doji sandwich on Apple right now, making the next prospect go up to the 200. But during this time frame or this time frame, you couldn't trade Apple if you wanted to. So why limit yourself to a small universe of stocks when the whole universe is going to sometimes tell you the biotechs are running hot this week or this month. Next week, it's the transportation stocks. Next week, it's the hospital stocks. So with instant scanning capabilities, I can find the best possible trades. I tell people, even if you're a neophyte in candlesticks, you're going to be able to find the best possible trades in less than 20 minutes each day. When you get good at it, it's going to be less than 7 minutes each day. You're going to find the best trade setups because you're going to recognize which ones have the strongest signals, like your best friend signals and Boise Cascade, Doji Gap Up, next target, the 200-day moving average, or the left-right combo, or a fry pan bottom breakout. So these are all, now here's ERRI. What do we expect after a big price move of a breakout? At least a 45 degree. And how long do we stay in that 45 degree until we see a sell signal and a close below the T line? With the caveat that right now, notice what it's doing. It's staying above the 3T line, which is well above the T line. So I'm using the 3T line to tell me if they can close it back below the 3T line, they're probably bringing it back to the T line while it's still that far away. WTW, another big gap up. We had profit taking yesterday. So this is why we told everybody in the chat room, or I did in the morning, that it was opening higher, but notice how far away you are from the T line. So the smart thing to do when it opened was just put your stop at the previous day's close, because the rationale would be if they open it higher and didn't keep continuing it higher like they had done for the last couple of days, that meant if they brought it back down through there, there was a different dynamic. You want to be taking profits. They're probably taking profits. But now look what's happening. Did a doji right smack dab on the 3T line. Makes it very simple. If they open this positive tomorrow, it tells you the profit taking is over. They're still taking this strong move up. If they open it weaker, you probably have a doji sandwich, which means likely you're going to head down to your down to the T line. What are your scanning settings to get those 27? Again, I take the whole universe of stocks, and Don will do a scanning session here pretty soon for members in the next week or so. But But my criteria for my universe is stocks greater than 5 and trading more than 200,000 shares a day. That brings the universe down to 2,700. Then I sort it the next day by which stocks have had the biggest percent price move, or even make my universe a little bit more fine-tuned. I'm looking for everything in my universe that have stochastics below 20 in the oversold area, and then sort it by the biggest percent price move, because now I've got oversold stocks that have now had a big move to the upside. More than likely, I'm going to find right within the first 10 stock charts 2 or 3 that are candlestick reversal signals. Gig one, there's I think all our scans are on TCNet, or not TCNet, TOS. Just look for the candlestick scan package. Let me get through these. Remember, just wait for when I tell Jim to do the double line, then request up to two symbols. TCK, strong price move, selling off. Where do you think they were selling it off? At least back to the T line. Now you had a little left-right combo and starting back up. There's your J-hook pattern starting. Where did it do it? Right off the 50. If this is wave one, which was approximately 3.5 points, look for this to head up into the $10 area. Oh boy, I'm way over time again. J-hook pattern on core, C-O-R-E. Another one you can be buying on positive trading. You can see the J-hook pattern setting up. Tenga, we have been in because it's never, E-G-N-A. Notice it just kind of hovered here on the T line. There was your left-right combo, break out of this downtrending channel. They broke through the 50, and then look what they did on the hammer day. Came right smack dab to the 50. Did a hammer, starting back up, good potential of moving back up into this area and or heading for the 200. What was the scan type again? Oh, I set them up in different universes. I can have my trading universe, which is 2,700 stocks greater than 5, trading more than 200,000 shares a day. Then I can fine tune it a little bit more. Stocks in my universe that have stochastics below 20, which means they're oversold, and then sort them by the sorted by the biggest percent price move today. So you've got oversold stocks that have had a big price move. More than likely, in the first 10 charts, you're going to find 2 or 3 of the best reversals. Diane, let me get to Google later. Okay, on the short side, charts work just as well on the short side. If you start seeing things that are trading below the T line, this is kind of what we're looking for. Notice kind of our big rounding top or a head and shoulders. Bam, they slammed it down today. Now, they slammed this one down today. Remember what the market did today. Up 320 points. On Tenga. No, remember, we're buying the pattern now, the J-hook pattern. So stochastics are probably going to be in a J-hook also. They're going to start curling back up. Mark, yes, these are recorded. I think Jim can give you the link when we get done. So SRPT is an example of a kicker signal starting the downtrend. And when it broke through the resistance level or the support level, where do you think it was heading to? Right smack dab to the 200-day moving average. Do they always get there? No, but we always play the probabilities of where is the next target that everybody is going to be looking at. AKRX, there's our rolling over again. And when we watch these support levels, either they're going to do a double bottom here, or if they break it, now they're in a wave 3, wave 1, wave 2, heading for wave 3. That was our scenario when we recommended going short on ATRA, because notice what they did. They gapped it up and immediately brought it back down below the T-line. We started shorting because that pretty much told us they couldn't get it up above the T-line. We were probably now wave 1, wave 2, going into wave 3. Oh, I skipped some. H, Z, and P. Anytime you see that gap down doji, notice the wedge formation. What's our simple rule of a doji? They're going to move it in the direction of how they open it after a doji. Well, if they gap it down, remember, that's your bearish best friend, and they're gapping it down through this resistance level, that's a good indication that the next move is going to be that same magnitude. So we were short and got back short on blue, because this is where, again, you observe the obvious. Where was the sell signals occurring? Right smack dab at the 50-day moving average. We covered our short position here and re-shorted it here because it came right back down through the T-line. Got a little bit dicey here, but as you can see, they haven't been able to close this above the T-line. AMBA is another short that we've been doing, because as you can see on this whole downtrend, and this is another thing that you want to observe, which direction is this moving overall? And every time they come up to resistance levels, what are they doing? They're creating sell signals. Why don't I seem to see down signals better than buy signals? D, is that when you're getting ready to sell or going short? So anyways, right now I would be short AMBA because last wave was this, wave 2, going into wave 3. Because the sells, well, it shouldn't be. Sell signals are very easy to identify, especially if you're up in the overbought condition. Start looking for your sell signals. There's your shooting star. Then they start gapping it down. And there's nothing difficult about finding the sell signals. Where are you with the stochastics? And that's how I kind of learned the signals 30, 40 years ago. I can't remember back that far. But if I felt if this was the top and I could set my stochastics to the top, then I start watching what happened up here. What type of signals did I see? Well, that looks recognizable. I'd go back to my antiquated candlestick booklet and say, oh, that's a shooting star. Now, remember, out of the 50 or 60 signals that are out there in candlestick world, came up with only 12 that you all saw often enough to spend your time and energy to try to identify. The rest of them, I just browse through my book every now and then just to recognize ones. And so I recognize them that if I see a sell signal that may not be one of the major sell signals, at least I know that it's a sell signal. Let's see, what is your stop settings? Stochastics. My stochastics are 12.33, and that's nothing more than just playing with them 40 years ago to have the tops equate to the tops and the bottoms equate to the bottoms. So there's the kicker signal on win. Where did it take us? Right smack dab to the 50. Start gapping it down. Win was down $1.29 today. You got to remember that's below the T line, and that's on a day when the markets were up 320 points. So again, let the chart or let the market tell you what the market is doing. We're still short Scotty, even though it traded up a little bit today. Stochastics haven't quite got to the oversold area. But this makes it very simple. We're short this one because notice what it did when it hit the failure or the line. There was selling. There was our shooting star, doji, gap down. It was pretty much told us they were failing here. Where was our next target? Now, either down here or wave 1, wave 2, going into wave 3. So this makes it very simple. What do we know about a Harami, which it formed today? Very simple. If this moves back up above today's high, I'm closing out my short position. Because where do you think the next move is going to be? Back up here to the T line. If it fails, I can always reshort up at that level. And Shake Shack. Now, I'm not familiar with the stores in Shake Shack, but riding to the airport from Las Vegas after speaking out there to the people after Traders Expo, I drove past an actual live Shake Shack. But this one, notice what's happening. Big rounding top. And it still, even though it traded up today, still hasn't been able to get back up above the T-line. Okay, that's about it. This one will probably be recommended on the short side tomorrow because you can see where the trend channel is. See if I can make this smaller. But you can see what happened today. We had a big doji gap down. Look where the stochastics are. They're up close to the top end of the range. That tells me there's probably enough force still to the downside to break this level, which means there could be another strong move to the downside, breaking this support area. How do you identify a beginning of a wave? Only nothing major on that, Earl. But if this is a wave 1, this is kind of a wave 2, wave 3, it's nothing sophisticated. It's not anything to do with Elliott wave or anything like that. It's just identifying a wave because prices move in waves. There's always a move, then there's a counter move, profit taking, and then there's continue the move. Can you include some green flags on your daily picks? Some green flags. I don't know what that means. KNX near support, yes, but remember, look where your stochastics are and look at the signal. A doji gap down. That tells me the support may not hold here. What is the rule of thumb about setting a stop loss if you cannot sit at your computer? If I own something, and I'll go back to the darn cotton trade today. Today the cotton trade was opening higher and trading higher. And it was trading way up here when I left for the airport. And it would have taken me all of 7 seconds to say, all right, where should this price not move that I'm up here in the overbought area? Where should it not move from this level to tell me the bulls are still in control? I could have just simply put a stop at where it opened, because if it came back down through there, it was probably producing some sort of sell signal, and it was telling me the 200 was acting as resistance. I could have saved lots of money. I had to close out the trade down here because it wasn't moving back up, whereas I had good profits in it, and I gave it all back. So you put your stop, and the Japanese rice traders have very simple rules. For example, if this was the candle with everything setting up, a left-right combo, that told us that this was where the bulls were taking control, and the next day it opened positive and I was buying, Japanese rice traders have a very simple rule. If this was the candle that told us the bulls are in control, if the bears could close it more than halfway down that candle, that tells me the bears are still in control, close out the position. So Valley, we will be also doing a stop loss session in the members area. We're going to be doing more training sessions now that it's getting yucky outside at night and I can't go to the barn as often. Do you wait for the first 5-minute bar in the morning to close before you put a trade on in the morning because of how it goes? Usually what happens is if I was buying, and what one am I prospecting to be buying? Oh, is this ML, whoops, MLNX. If I'm buying this one on positive trading tomorrow because it actually closed as a doji instead of a green candle, but if it opened positive tomorrow and the market was opening positive, yes, I'm buying probably within the first 30 seconds to 3 minutes. First, I want to see it open and start trading positive. A lot of times you see a stock gap up. You think, oh, that's going to be strong. But I give it a couple minutes to see whether they're backing it off first or whether they're still taking it up. I would rather miss out on a few points knowing that I'm buying in the right direction. That's Barn, yes. Stochastic settings are 1233, slow stochastics. And there's nothing magical about that because really what I'm looking for is, am I buying a buy signal with it in the oversold condition? You check the, well, yeah, I look at the markets. Obviously, if this opened positive tomorrow and the market, pre-market futures were showing that the market was going to open up down 140 points, yeah, I'm not going to jump in right away. I'm going to see what they do once the market opens. If the market opens and starts heading down, but this is still heading up, confirming the pattern, yes, I'm going to be a buyer because that's what the pattern tells me. On the other hand, if it opens positive and starts waffling around, not doing much because the market's heading down, I don't have to do anything right then. I'll just wait to see what happens later on in the day. And so here's one. So here's my evaluation of a wave. Wave 1, wave 2, look at my slow curve to the downside, and wave 3. Tells me they could be moving this down another 6, 8 points, taking you down into maybe the $6 range. I just know that now that they've did a left-right combo, let's make this big enough where you can see the signal. Left-right combo, and they pretty much broke below where any of the closes and opens were. That means there's probably more downside to this one. Okay, and so we're going to start doing some of our option training here in the very near future. Amazon. As we can see on Amazon, they gapped this up and they traded near the top end of the range of yesterday all day long, doing a doji. So if it opened positive, what type of pattern would we be setting up? The doji or the flutter kicker signal, which meant would be trading higher. So they weren't selling it off going into earnings. Now, last I knew, it was trading up here around the 5 or the 620 range. Yeah, they beat. So when I looked at the options, I'm usually buying options anywhere from 10 cents up to $8, depending on which, but I think it was the 575 options were trading at $32. I'm thinking I can't buy 10 options at $32, and it took me a couple seconds to realize I don't have to buy 10. I just bought one. So I'm hoping that will act well by tomorrow. All right, up 54. All right. And Google was up big also. Yeah, that's right about where it is, $618 or so. Okay, so with that, so just a reminder to members, in the next week or two, we've got requests on how do you keep your profits instead of making big gains and then giving them back, making big gains and giving them back. We'll do a session on that, which all comes back down to kind of the mental status of trading. We'll do a session on stop losses. We'll do one on entry and exit strategies. We'll do another one on how to scan for the best trades each day. And that's kind of the crux of the whole website is we're trying to teach people how to do their own scans, because even though I put out 2 or 3 stock picks every day, I don't want people riding along just using those as stock picks. I want them to look at the charts and say, all right, I got to figure out why this is being recommended, so that you're constantly in a learning process, so that someday if I get run over by my own tractor, you still know how to trade options, or not trade options, trade candlesticks. Trading the biggies, that's being worked on right now also. The Netflix, the Googles, the Amazons, Apples, that sort of thing. I've not shorted stock, but bought what's instead due to the less capital. Yeah, that's whether you're going to buy a stock or an option or a call, or buying shorting a stock and buying the put. One of the key benefits, just like anything else, you don't have the time factor, and you've got to have that percentage move to make sure you get back your premium that you paid for the option. Gold, we did. Gold has backed off ever since it peaked out up here at the 200 and is still trading down. So I would suspect that it's probably coming back down to one of these moving averages. Yeah, so all our training sessions are usually start at 8 o'clock at night and go for an hour. And we do have all the videos on those, but in the members area, I mean, you can pay for them at a discount, or you can look at do a live session. That way, at least if you have questions, you have them answered right there immediately. Okay, save your individual stocks. Hold on, Elsie. I'm finishing up. I would like to learn the basics of using an advanced search, which I bought months ago and never used. Oh, Judy, use it. These cold, rainy nights, when you're sipping your hot chocolate, watch some of the videos. Yeah, that's my big worry. But I bought a Mahindra, so it's not big enough to run me over. Okay, Jim, let's go ahead and do the double line. All right, now you put in 2 requests. And Jim, let's go ahead and do the next double line. The end of the request. All right, let's start here at Laws is a nice J-hook pattern. Notice your doji gap up. Notice where you've closed right about a resistance level. You can buy this on positive trading tomorrow. And, oops, you already scrolled past me. NMZ, just stay long on this one. As we can see, it's just kind of a steady uptrend. Nothing exciting, you just stay long on it. STRP, same scenario. You're right at the breakout level. You can buy this one on positive trading. Just stay long on this one. SWKS, kicker type signal. So expect your first move right now to be up to the 50, and then just see what it does once it gets to the 50. Apple finally has done a doji sandwich. It traded for weeks just flat. Now kind of this fry pan bottom tells us our next likely target is up here to the 200-day moving average. And Facebook, all you can do with this one is stay long until you see a sell signal. 2U, stay short until you see a buy signal and a close back up above the T line. The fact that you're in the oversold area, if you're short, I would just use today's high as my stop. It shouldn't come back up through that level. If it does, more than likely they're coming back up to test the T line, and then you can see if it breaks through. If it doesn't, you can reshort it. Doji sandwich on Agco. I'd watch to see what it does once it gets here to the 50, which is also this downtrending channel. So that's your first resistance point to watch. But you have a doji sandwich, which means more than likely there's going to be more upside. AEM, left-right combo in this trend channel. You just stay long on this one. Potash. Potash, not a real intriguing stock. Did do a bullish harami. You can buy this one on positive trading, but your first target is the 50. Again, this downtrending resistance level. Trox tried to move up today. Right now we're out of Trox, but all you need to do is put a buy stop up here at 740. Because if it moves up there, it tells us wave 3 is in progress. They're moving away from the T line. Ford Motor Company, stay long. This one we have in our long-term accounts. Just want to stay long as that stays above the T line and the 50. ITCI just won't get out of its own way. We closed this one out the other day. I'll probably buy it back, not at this level, but probably up at this level. If it comes up through there, breaking this resistance level, now we've got the potential of another wave to the upside. Netflix, stay short. As long as it doesn't, at this point, with it getting toward the oversold area, use today's high as your stop. It shouldn't come back down through that level. And FCX, stay short on this one. Notice you had the doji gap down. If it opens positive tomorrow, they're bouncing it back up to the T line. If they open it lower, I'd be shorting it, especially if it came down through the 50. Boeing, stay long on this one. It broke out through the 200. And Lockheed, same scenario, broke out into new high territory after the J-hook pattern setup. So you know this move and this move are going to be the same. There's still a little bit more upside. Caterpillar's having a hard time getting out of its own way. It's still caught in this downtrending channel, which it's been in for quite a while. I wouldn't be buying this one until they can get up through the 50, which tells me this downtrend has been broken. So you want to see a definite change of trend before you want to buy that one. And the bonds are slowly moving up, kind of hovering in here, which means interest rates aren't going anywhere. I wouldn't be, as you've got kind of the Morningstar signal, it bounced off the 50. If I was going to be a buyer, I'd definitely want to see it get up through the 200 before I started buying. Under Armour goes short because you can see the wedge right here, and then they broke it down. And I think this was actually a doji on the other charts, but they broke it down through that wedge. I would suspect the 200-day moving average is going to be your next target. Boyd Games, just stay long. Notice how it consolidated right back to the T-line. Your J-hook pattern is still in progress. Texas Instruments came out with good earnings. Look for a 45-degree to come off of here. There's your kind of your kicker signal. There's going to be more upside. OCLR. This is your message. Didn't do a bullish candle, but it did a doji. And remember, it's going to move in the direction of how they open it after a doji. So if this opens positive, you can be buying. then I probably would use today's open as my, or today's close as my stop. If it opens positive, it shouldn't come back in this direction. It should be moving in this direction. And PFPT, this is the message. This isn't a bullish candle. This is a bearish after they opened it. But the message was they gapped this up. So this is where you watch for the profit taking to be over and then start buying it. After that, same scenario with Weight Watchers. After Oprah decided she was going to buy a position in it, profit taking, Doji, if they open it positive, it pretty much tells us the profit taking's over. They're going to move it in the direction of how they open it after the Doji. ONVO, nothing here. You can't short it because you're below $5, so I wouldn't be trading this one at all. CIT Group, kicker signal. This one you can buy on anything above at that level, 46.30 on positive trading. And LGIH, you're in a very slow, steady uptrend. At this point, you can see that the 20 is acting as a support level. People often say, well, what happens if it hovers back and forth above the T-line? It usually means it's not going anywhere fast. But as long as this one stays above the 20, I would stay long. FedEx, J-hook pattern, look for the 200-day moving average to be the next target. Disney's been in a nice steady uptrend. All you can do here is stay long and notice what started this uptrend. Bullish Harami in the oversold area, gap up through the T-line. Now you're starting to see some exuberant buying. So this is where if you're in the overbought area and you start seeing exuberant buying, be ready to start taking some profits. Watch for your next sell signal. LXRX, nothing here yet. Nothing to get real excited about on this one. I'd be someplace else. And CTL, all you can do is stay long. There's kind of your morning star signal with the gap up on the third day. J-hook pattern that took you to the through the 50. All you can do with this one is stay long as it stays above the T-line. This is your kind of your belt hold. So you're in an uptrend. They gap it down. And this one you can see was significantly out of the trading range and then brought it back into the trading range. That told you they wiped out some sellers in here, leaving less sellers in front of you. Now you're getting up here to where you're starting to see some sell signals. Very simple. You don't want to see it close back below the T-line. Oh, Judy, I don't know how to show that here tonight. That's a whole session. Suns, probably wouldn't be long or short this one right now. Notice what it did once it got up here to the 50. Did a dark cloud, take profits. I'd buy this one if I saw another close back up above the 50, which would give me that J-hook type pattern. But right now I wouldn't be in it until you do see that close above the T-line. Tazar, there's nothing here. At best, you should be short because you have a bearish left-right combo. Oh, somebody was asking about a left-right combo. Left-right combo is a doji followed by a bearish engulfing signal or a doji followed by a bullish engulfing signal. Very strong reversal signals. We did SWKS. Now, big bullish engulfing. If it opens positive, it's telling us that this little resistance level is not acting as resistance. There'll be more upside. Tractor Supply. Uh-oh. Another one that if it opens positive, breaking this resistance level, they're taking it up further. Then you just watch your next resistance level. Guild. Broke the 50. Still in an uptrend. if you're buying this on positive trading tomorrow, just don't let it close back below the 200, because that would tell you you're back down into this trend channel. Kroger's still nothing real exciting until they break up above this level. As you can see, it's very slow sideways. This is one of the institutional type traders that doesn't get a whole lot of movement. Other than back over here, it had a nice steady eddy for quite a few months until you hit the sell signals, bringing you back below the T-line. Right now, it's so sideways, I wouldn't be trading it until it breaks up through, let's say, the $40 range. Slumberger, J-hook pattern, doji sandwich, target 200-day moving average. Starbucks. All you can do with this one is stay long. Another steady eddy type situation where they brought it down. Now, as long as it stays above the T-line, you just stay with it. Kinder Morgan, get ready to short this on a weaker open tomorrow. There would be your doji sandwich with a gap down. Kind of somewhat, I think, what we saw in, no wonder that didn't. Scotty kind of had that doji sandwich with the gap down in it. Bank of America, just not an exciting stock. Yeah, I'd be someplace else. There's really nothing here to get you motivated on that one. Nugget was trying to come back up as a J-hook. Notice how it didn't move too far away from the T-line. Now it did a kind of a little bullish engulfing signal right here at the T-line, which means if they start opening this positive, look for your J-hook pattern. First target would be coming back up here to test the high. If they broke through, wave 1, wave 3. BP, J-hook pattern, look for the 200 as the target, use the T-line as your stop. The oil fund, nothing here yet. Probably wouldn't be long or short because it's back in the sideways mode. So not trading oil right now just because there's not enough direction to it. Price line, stay long as it stays above the T-line. COG, this one you can get ready to go short on weakness tomorrow with the expectation the next move is going to be down here, and then if they break this level, you've got more downside. ASMG, you stay short, especially if it opens lower tomorrow. At this point, I would use today's open as my stop. It shouldn't come back up through that level. With SanDisk being bought out, I don't think the buyout price is too much higher. I'd take my money. Again, notice how this one started on your best friend signal, then your J-hook. You just stay, in this case, I think what was it, 81 was the buyout price. At this point, your upside potential may not be that great anymore. Take your money and go on to something else. Cree, nothing here. Sideways, just a junky chart. And FCX, this one has to get back up above the T-line to do the J-hook pattern. Wouldn't do anything with this until it does. Tesla is still getting battered around because of the automatic steering problems. You stay short until you see a buy signal. At this point, I would use today's high as my stop. It shouldn't come back up through that level. McDonald's had hit a new, I don't know whether it's an all-time high or at least a 12-month high. Look for a 45 degree to come off of here. And eBay had a strong kicker signal today. This one you can be buying. So this is what we're going to be teaching people in our option training. What type of options would we be buying off of this one based upon the number of weeks we have before expiration? So a lot of people say, I just want to buy the calls. Sometimes the spread is better. Sometimes buying in the money calls are much better. SUM has been a short ever since the evening star type signal and gap down. You just stay short on this until you see a close above the T line. The stochastic still heading down. Tell me it's a good possibility. At some point they could come back down toward the lower end of this trend channel. And MNK, we're staying short on this one. There's that slow curve. Wave 1, wave 2, wave 3, which would kind of put you right down here at the bottom of this trend channel. Let's see, Goodyear. Stay long. Notice your belt hold here wiped out some more sellers, telling you you have more upside. And INSEE, nothing here. Just no direction. I'd be trading something else. Baba, you get ready to buy this on positive trading tomorrow, telling me the J-hook pattern is in progress after today's bullish harami. And Navi, another one you can buy on positive trading. Doji sandwich breaking out above the, keeping you up above the 50-day moving average. CSX, you can buy this one. Just be aware that there's your next target. You're still in this kind of wedge formation. Nothing real powerful moving it at this point other than just a uptrend. KAR, you're hovering right here above the 50. If I was going to buy this one, I'd put a buy stop probably right up in this range. Tell me they've started moving back up from this level. Null, just stay long. Notice they haven't been able to close this below the T line. They came back and they've used the support level at the 50 a number of times, which tells us they're not going to sell it off. Nike, came back and used the T-line as support. Stay long, but I would probably use, again, the T-line. I wouldn't want to see it trade back below that level, not just close below it. If it started trading back below that level after 3 dojis up here, that tells you they've started taking it in that direction. GLNG, right now you want to be short on this one. Notice the left-right combo right here at the resistance level, making the bottom of the trend channel the likely target. G-Pro just can't get out of its own way. Once it got up through the T-line, did a left-right combo and right back below the T-line. That puts you in a bearish J-hook pattern. Panera, stay short, but you're getting in the oversold area and you bounced off the 200. If I was short, I would probably, because it closed here, I'd probably use this level as my stop. But if they came back up through there, they're probably bouncing it back up toward the T-line. 8, okay? And the Russell 2000, not quite as strong as the other indexes. It won't show any good strength until they can break out of this congestion area. X not found. Stocks, semiconductors. Notice the trend kicker. Opened here and closed here, then gapped up and went the opposite direction, telling you there's going to be more upside. Papa John's, nothing real exciting here. At least you're supporting but I probably wouldn't want to buy this until it broke out through the $72 range because you've been stuck in this sideways mode for so long. ConAgra, this one kind of breaking out of a wedge and breaking through the 50. You can buy this one. Just be aware that it's not going to be a real real strong percentage mover. I understand sell when there is a sell signal and the close below the T line, but what if you get a close below the T line without a sell signal? Do you sell anyway or wait? I wait one more candle. If it closes below the T line without a sell signal, my criteria is that it better open positive and trade positive the next day. If it opens lower, yeah, close it. You can always buy it back when it comes back up above the T line. The SPY, just like the S&P, climbing toward the 200. The Qs still in an uptrend, and showing it's above the 200 on the Qs, but still right at the 200 on the NASDAQ itself. They say when the dollar is strong, companies like CAT have a high probability the price is going to move down because, yeah, that could be, Mario. But again, that's too much sophistication analysis for me. I just look at the chart, and that builds in at what all the they says are. Royal Caribbean, you can stay long on this one. It's not an exciting one, but it's a slow, steady uptrend. You just stay with it as long as it stays above the T line. PepsiCo, this one kind of broke out. Not an exciting stock either, but if you like it, since it broke out through this with kind of a big fry pan bottom J hook, you've got more upside until you see a sell signal and a close back below the T line. V-Built, nothing here unless they did something after hours. Right now, I'd be out of this one. It's just not moving. And CANF opened up positive today, but traded right back off again. That tells you definitely want to be out of this one. There's no buyers on this one. Flowers, Flowserve, you could be buying this one. You had that long-legged doji, small doji. I'd be a buyer of this if it can climb up through the 50. Whoops. ARW, nothing here either. You're stuck sideways. I need to see, and you really don't have any buy signals in here. So this is, I would rather buy this at $60.50, knowing that it broke through and doing the next J-hook move. Nally, not moving, but it's paying 14% dividend yield. Just stay with it. SSW, another one that doesn't have any movement to it. I'd be trading someplace else. Let's see, is Hanks a symbol? All right. SKS, that's not one. Berkshire. You can, oh, they've split this one. If you own this one, just stay long. Okay, a couple more, and then we'll call it a night. BAX, you stay long as it stays above the T line, but you can see you're running out of steam on this one. I definitely want to see this get up through the 50. BXLT, that one's not working. Jill, we can do ETFs. I don't trade ETFs because I get more leverage out of the stock. ConocoPhillips, trying to do a J-hook pattern. You can buy this one on positive trading. Cyber is still in a downtrend. Did a doji today. I wouldn't want to see it trade back up above the high of today. I'd cover a short position. I'd still be ready to go short, even though we're getting toward the oversold area because you've got kind of a dumpling top setting up. But if it opened weaker, want to be going short on this one. MGM, nothing here. At best, you want to be short, or you can be going short on this one if it comes back down through today's low. What is Dominion? Resources, just stay long, as long as it stays above the T line. Now that you're up here in the overbought area, you put your stop at today's open. It shouldn't come back down through there. Whole Foods, nothing. No trend, no direction. I'd be trading somewhere else. And BIB, this one's kind of stuck sideways also. Yeah, wouldn't be long or short this one either. ANET, got a little Morningstar type signal at the end of a flat trading. It acts like a scoop pattern. I'd be buying this one on positive trading, looking for a slingshot effect, which if it got you through the 50, could go much higher because you'd be breaking this downward trend channel as well as the 50. Okay, STX. This one needs to open lower if you're short. If it opens positive, they're going to bounce it up to the T line. I'd take or close out my short position and then see what it does at the T line. DGX, this one you get ready to go short on weakness tomorrow. You can see that it failed the 50 again. LNG, stay short, but also use today's high as your stop. I think we did Royal. JC, there's 12 major signals, 6 buys and 6 sells. And then there's kind of combinations of signals. There's 18 that I classify on a quantitative basis, which is your doji gap up best friend, your left-right combo. So there's a video in the members area or in the area that you can go through the 12 or the which ones are quantified. A lot of people ask which ones are the most strongest of the signals. Well, we've picked out the most strongest out of the 50 or 60. We've got 6 that buys and 6 sells that work extremely well, and they will usually occur probably 99.9% of the time. And even if another signal did occur, more than likely someplace else there's a one of the 12 major signals that you want to use. Okay, let's call it a night. Can you day trade? Yes. Remember, the candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame, whether that's on a 1-minute chart, a 1-hour chart, a monthly chart, or a weekly chart, whatever you're trading. Oh, I think Gig, the green book, I think they're selling it direct. All right. Okay, everybody, have a good evening. We will see you bright and early in the chat rooms.